Welcome to another edition of The Real Money Show. My name is Jeremy Wiseman. I'm joined by Jerry Correia. Today's date is January 22nd, and as we're recording the show today, silver is up 34%. We're only just over a couple weeks into the year. Gold is up 13%. And you want to stick with us because we're going to bring some information to you that show you that this run is far from over. Jerry, should we just get into it?
Let's get right into it, Jeremy.
All right, let's jump into it. So first, I was doing some research, going through all of the people we follow on X that are tracking all of the deliveries out of both the COMEX and the LBMA. Now, COMEX is easier. LBMA doesn't do the type of reporting that's specific, so you have to track movements and such. But ultimately, the numbers are starting to look like over the last month and a half, over $2 billion worth of silver has come off the exchanges. Now, what that means in the big picture is that the paper market that has been controlling the price of silver for decades is collapsing. It's now being trumped by physical precious metals, and it's becoming a structural issue.
This is exciting stuff,
Jerry.
This is just what we're seeing. We've commented before about this is the removal away from the London pricing mechanism that has controlled the precious metals space for decades and centuries. And they've known one thing, that gold and silver are the world's collateral, that they can do many things with collateral, gold and silver. This is the theme going forward. For me, in the next 2 years, that word of the next 2 years, it's a very popular one, it's a very powerful one, is the word collateral.
Now, I want to add to this that if you think about silver and gold being taken off the standard in 1971, and what we believe the op began, the PSYOP, to get people out of holding physical gold and silver, saying it's a relic, it doesn't pay a dividend, what are you, a gold bug? All of these, it's a pet rock, all of these things to get people to not own it. And my own personal belief is because you can't steal money through inflation if it's held in gold. Right? I think Greenspan said that, right? The only thing that can protect you against it is physical gold.
Well, they create so many financials off of the 1 ounce of gold. The ratio today is about 135. If you go to usdebtclock.org, which I checked out before we started recording, if you look at that, it's a very, very exciting US debt clock. All of the data that you get, all of the metrics, specifically the gold to M2 money supply, different ratios. And one of those is looking at the ratio between how many paper derivatives of gold are there out there versus every 1 physical ounce available. And look at how many financials London created. Over 134 fake paper ounces versus that 1 ounce of gold in existence. And there's about 400 to 1 silver ounces. Fictitious, artificial supply created out of thin air. And now that this is the reason why, if I want to know if you have it, if I lose confidence in you, London, I want to take delivery off of that contract that I bought.
Well, that's exactly it. That if you have all of this paper and you're using it to push the price down, you're getting a compression in the price of silver. And so for decades, we didn't really know what the actual price of silver should be. And it was obviously undervalued. That was highlighted by the fact that the ratio had gone up to 80 to 1. That's 80 ounces of silver for every ounce of gold. And it even got to one point to 101 and a little bit past. And so we're starting to see that ratio come down as physical product is being taken delivery of. And so the question becomes, well, what's going to keep that going? And one of the things that I'm finding with some people here and there, because we have to adapt to the changing markets. As you said, if the paper market is collapsing because there's all these deliveries, then where should the actual price go? And I talked to some people and they think, well, once it gets to 35, I'll sell my silver at a low ratio. And I'm thinking, what's the expectation? That the price is, that it's going to go snap back to 80? How does it snap back to 80, Jerry, if the paper is being, if it's being deleveraged?
Right. There is no, we're well supported when, with the ratios, and when we look at the participation coming into who is demanding the gold? Who's demanding the silver? These are countries now remonetizing gold and silver, reintroducing gold and silver for the reasons why they are considered money to be in the first place. These are intrinsic assets that have monetary attributes, and they have industrial attributes. And we're moving away from, as we are now, days into the World Economic Forum meeting, this meeting in Davos, globalization has failed, and we're moving away from that big one world style, one world government, back to mercantilism, building of things. So the reshoring of physical gold and silver is happening. It's underway. It's unstoppable. So meeting these ratios, I think we're well supported, especially for silver. It's on the critical minerals list.
Yeah. Okay. So you just
critical.
You just took. Let's keep pushing this forward, because ultimately we've seen some great gains in silver over the last year, and the question becomes, does this still have legs?
Right.
And so I want to bring some facts to the table, and we started with this idea of, well, they're taking all this delivery.
Yeah.
$2 billion worth of silver being taken delivery. Let's add to that fact. We now also have that in November, the U.S. added silver to the critical minerals list. And what that means is you now have to secure supply lines for silver, that you need to make sure that you're importing it and that you have enough to produce what you want to produce. Now, I believe that in the States, and you can see a lot of evidence of this, they want to bring manufacturing back.
Yes.
And that's what Howard Lutnick was talking about, right? Mm-hmm. So you're going to need stuff to build all that. And you're going to be producing stuff when you have all these factories. And so you need to start securing a lot of silver, and that means you're now competing with China for the world of manufacturing. Interestingly enough, Canada does not have silver on the critical minerals list, although they were a bunch of miners did get together to say we petitioned to put it on the list. Canada does not have it on the list. So we have silver now on the critical minerals list. And to add to that, China has now restricted exports on physical silver as of January 1st. There's 44 companies that can export, but they have tightened control on that. You need to go to the government to see if they'll let you do it. And so they're not, and last year I think they exported something like 5,000 tons, which was a record. I don't know if it was 5 or 8, but it was a record at the time. Gone. That's no longer coming to global markets. It's going to stay domestically in China, which means supplies just got that much tighter in the physical market. So when you just start to look together, you have physical demand off the exchanges, you have critical mineral list in the United States, you have exports being restricted out of China, and let's add to the fact that last one, and then we can discuss, is that the U.S. with Korea Zinc is funding a $7.4 billion smelting facility for critical minerals in Tennessee. So you know that they have an issue of refining is another big problem. And that's not really going to be up and running until 2030.
Yeah, you can't just it's not a flip the switch of getting supply out of the ground. It's going to take a lot of time, especially here in Canada, cutting the red tape and getting out of the way and putting Canada back on the map with silver mining. Remember back in the 80s, if you can recall, Canada was number 1 in silver mining, Jeremy, and we were still number 4 for gold mining, number 4 in oil. So there's a push for resources and reshoring and protecting your infrastructure for the furtherance of building out technology, because the future of the economy involves technology. Well, you have to build it, and it requires a lot of silver. Most of the industries require silver. If you look to the demand from Samsung, for example, they've secured directly from a mine 2 years worth of silver to meet their demands. So this totally goes against that. The AI Asian guy who says Samsung does not need silver, they're going to replace it with graphene. That's not the case. That's been debunked, by the way. Be careful of what you're taking in from this AI guy. Take it from these real guys over here that have been doing this since 2008 with the Real Money Show. And now you could see us on Rebel News.
Yeah, I think, one thing, I'm glad you bring him up because it's AI and we don't know who's behind it. But there is a lot of misinformation out there. There's a lot of various narratives coming into play in the precious metals market. You could stick with the regular fundamentals. I was just listening to an interview with Daniela Cambone with our favorite Michael Oliver, one of our favorites, and he was very much signaling an alert, his concern about the U.S. dollar. And that's always been part of the fundamental reason to own physical gold and silver, is the fact that the dollar is being made worthless every single day. If the government can print it, if the government can go into further debt, and you can feel it, we know Canadians can feel it because they can see it in prices have risen everywhere. And so how do you protect against that? Well, gold's up over 800%, I believe, in the last 20 years. And you can see silver is starting to make some pretty big gains again because it's no longer being suppressed by paper. And so it's a tremendous opportunity in that respect. You should be really excited where things can go. Actually, before we get back into the AI guy and the multiple narratives, you should be excited because, it's funny. A lot of the banks are calling for $5,000 gold this year. Their forecast was $5,000 gold. We're already at $4,900 on gold. And even Poland has approved their central bank to take delivery to accumulate 150 tons of gold. And just so you know, we're saying $2 billion of silver off the exchanges. Their gold acquisition approval is worth $23 billion.
Oh, well, there you go.
So at this point, they could probably buy all of the silver off the exchanges. I wonder what's stopping them in that case. Yeah. They could become a titan in the silver market. But if you look at where gold's headed, because of dollar devaluation, people don't, countries don't want to hold the U.S. dollar anymore. This could push gold to $8,000. And if you were to add 15% a year for the next 5 years, you actually get to $10,000. Mm-hmm. I digress. We can talk about
projections.
We can talk about bull markets and how many, what the gains look like in past bull markets. But just at $8,000 an ounce, if silver were to maintain 35-to-1 ratio, that puts it to 228. And if it were to go to its historic ratio of 16-to-1, you're looking at $500 an ounce. Now, I'm not going to hang my hat on a ratio. It's part of other criteria, but it's just interesting sometimes to play with that math.
Yeah, you have to. And I think it's very important to do that. We use ratios, we use cycles because bottom line, as Canadians, you and I know, you can't trust that CPI, the CPI at 2-3%. And it begs the question, do we really want to settle with yield? Does the yield of 3.5 really cut it? When you're decreasing purchasing power by double digits, I suggest maybe it's around 12 to 13% inflation, decreasing your purchasing power, decreasing your portfolio. The word for the next 2 years, and going back to Michael Oliver, if I may, looking ahead his forecast, he called about $200 to $300 silver within a few months. After that interview, he upped his projections even higher because of the T-bond issue. The U.S. Treasury, which is the very fabric of the United States financial system, is under fire. Many countries have already begun dumping massive amounts of treasuries to acquire gold and to acquire real things. And this is what we're expecting with the move towards bringing back collateral towards the U.S. Treasury to bring the collateral back to the U.S. dollar. Because remember, what is the best collateral? Right now, the U.S. Treasury is backed by paper, and paper backing paper will eventually, like Voltaire says, go back to its intrinsic value of zero. It loses its complete purchasing power, and that's what we're witnessing as Canadians. So you need to convert out of fiat paper currencies that can go to zero and roll into and convert into ounces, in and of itself valued in ratios and cycles. And this begs to question, when will this happen? So what's going to happen? What's going to be that pinprick?
In past,
maybe the yen carry trade
bull markets, how many times over does the price of gold and silver rise? I understand gold something like 8 times, and the low in 2016, 2015 was around just over $1,000.
Yeah.
So that would put it somewhere into the 8,000 range, right?
Right.
What about for silver?
For silver, I would think it's in the $200 to $300 range, I believe.
No, but what is the amount of times it goes up?
Throughout the for the 50-year period.
Yeah,
I think it's about 7 times. I believe.
Okay.
Into that. You caught me off guard with that one.
Okay, we'll have to get it for the next show. So let's go back to some of these other narratives, because one of the things, I took a phone call this morning, someone who's looking to get into the market, and she said, I was ready to get in last week. I wanted to do this and do it this way, and started talking to friends or reading articles, and it cast a lot of doubt into the market. And we mentioned this AI guy because what we've noticed with him, for example, is he's putting out tons of content, which is very expensive to put out that quickly, and it seems to have some facts wrapped in with some misinformation.
Who's funding that,
and
right?
Just enough to kind of give people pause. What are some of the concerns that people are having right now in terms of what's giving them pause, and what kind of narratives are you seeing, and how they may or may not be correct?
Yeah, so John Rubino put out, is this guy really a false flag? And, really we have to analyze what's the real motive behind here, because he's talking a lot about silver truths. So silver is the main focus. And if you look at the overall pie of who uses silver from the Silver Institute, out of the 100% pie, 10% is you and I, investors that stack precious metals to preserve our purchasing power. 95% is industries, countries that are remonetizing their systems back with gold and silver. So what's the real deal? Why is he talking to us, the people? He's using things like there is going to be a crash. The flash crash sign teleports to 84. Then $10 smash triggers Monday manic, and silver crashes. He's using all of these headlines, but we know, and throughout this time, that silver is very buoyant. We're supported. So what gives? Why? I believe, Jeremy, throughout all of his headlines, he's talking to you. He doesn't want you to take your money out of the banks. Similarly, this is the reason why the World Economic Forum and institutions, they require your money in the bank, because it's a fractional reserve banking system. They need your money to be pledged in the banking system. Your money is their collateral? I don't think so. Your money is your own collateral. And when you roll out of these banking systems and you roll into outside of the banking system with physical gold and silver that cannot be hacked, it cannot be bailed in. It's outside of the banking system. This is what people do. They want to move out and hedge themselves firstly in position for the topside potential with what's happening. A lot of individuals like Daniel Galley, he once pledged that, he pledged support for silver, that you can participate in the silver stock out, that there's silver is going to be running out, and that you want to participate. On BNN, he's the TD Bank strategist for commodities. He said that he was on board, and all of a sudden he capitulated and he said, well, silver's going to crash, and there's no silver stock out, guys. Nothing to look over here. And then he launched a short position, calling for $40 silver, shocking everybody. Guys, maybe I'm going to hesitate here, Jerry. I don't think I should buy silver because it's going to drop, says Daniel Galley. Well, he had a stop loss at $92, which he got stopped out. So not a very good call, and the forecasts are much higher for. So filter the news, speak to individuals and professionals like Jeremy and myself who, we try to poke holes in as much data that we get, and trying to filter through the noise.
Well, I think, look, it's not about trying to come up with a narrative. It's right. Here are the facts. We had $2 billion worth of silver taken off the exchanges. That we can see the paper is collapsing, which means the market is now moving towards, if you either have it or you don't. And we have a motto: if you can't hold it, you don't own it. And it seems that a lot of entities, whether it's countries, industry, maybe part of the investment, they're saying, look, we need the product. It's not good enough for just to roll over futures contracts. We want that physical, and you're going to have to figure out how to get it to us. So that's a huge part. And then when you add to them the facts of China isn't going to export it, that it's on the critical mineral list,
the case for
that
silver.
That they're building a $7 billion smelting facility for critical minerals. I was actually just talking to a client before we came here. She lives in Mexico, and she's all up on the market, which was amazing, because I said to her, whoa, the student has become the master, because she was schooling me on everything that's going on in Mexico, because apparently they are not making it easy to get the permits to actually mine the stuff.
Right.
So you still have a lot of pushback in the industry. And I was listening to an interview with Keith Neumeyer, who's is it CEO or head of First Majestic Mining, and he was saying, look, we're overflowing with cash, but we need to see silver at $70 for a prolonged period before we start investing and putting a lot of money into it. And the irony, of course, of that is that, yes, he probably will see $70 sustained. The price of silver may be 120 by the time they decide to start expanding. So there's a lot of real things happening in the world. And I find personally, from a psychological standpoint, a lot of people don't like it when their friends do something different.
Very true.
They want you in a box. They want you to do what they are used to doing.
The old you.
And at the end of the day, look, a lot of precious metals owners are independent thinkers. It takes a lot to say, look, you can call me a gold bug and I'm still going to own this stuff.
So true.
So it's been a great ride, and we do think when we put all the fundamentals together, and including the dollar, et cetera, that we're in for a much bigger ride from here.
Yeah, absolutely. We have the reasons why this market is going to continue much higher. The fundamentals remain with the old fundamentals, and there are new fundamentals at play. The converging between, gold being monetary, silver being industrial. They're converging. They're going back into different roles. And with the U.S. introducing, certain bills that introduce the gold standard again, and they're talking about the tabled bills that repeals income tax, we're moving back towards a place where, building things were important, and that is taking the lead here for the world. Whatever the U.S. adopts, the world adopts. That's always been the case. And right now, the U.S. made it very clear that globalism has failed. It's failed America, and they're moving in a different direction. And we share the largest border with them. So it's going to be very interesting to see what Canada does. But we as Canadians, we follow the same trajectory. If you see the writing on the wall, you want to roll out and roll into precious metals, because that is going to lead the way for you. You're going to create a relevancy in your portfolio. Gold and silver are very relevant right now, and by adding it in your portfolio, you're just creating a moat around your wealth, and you're positioning it for the growth that's upcoming.
Yeah, and I think this all comes around this idea of there's a new paradigm here.
Absolutely,
there's a new paradigm of not financialization, but actual physical and collateral, as you mentioned, and that's what's going to be driving the markets forward. And we're not seeing mass participation in North America, although Josh Philip Fair from Arizona Metals, Scottsdale Mint, he said that the CEO of the Wyoming Reserve, that they just purchased their first physical gold. The state of Wyoming just purchased physical gold. So they're just starting to get into the market, and they're making big moves, right? We know in the United States that Florida has legalized it for tender again, that you could pay your taxes with it, for instance. So imagine being able to buy a house with it, right?
Yep.
As because you can't do that here, right? But maybe in the future. I think as well, what's really something to think about, let your mind go a little bit, is if you're going to unleash industry, you're going to unleash entrepreneurialism. And you could only imagine that, in the last 20 years, we got an electric car, we got this, but we could be on the verge of seeing multiple Steve Jobs, multiple Elon Musks that are going to create all sorts of things that are going to need a whole bunch of silver in them. So I think it's going to be very exciting in that respect. And I think the takeaway we hope is going to be that this is going to be sustained for many years to come.
Yeah.
We just don't know exactly how far it can go. But I would say it's great to see the compression being released. We use the analogy of a beach ball being held underwater for decades. And I don't think we've reached the surface level of the water yet, but I think that it will find our way, and then start to look at gold and where gold's headed and where the ratio between silver and gold can be. And along the way, we still have to look at where's inflation, where's the supply demand, all of those things that we're looking at. The ratios are one aspect. So it shouldn't just be, well, where's the price? That doesn't tell us a whole lot. We have to look at underlying fundamentals and see, okay, is there more mine supply coming online? Are we still in deficit? Well, what's the demand being like for industry? And it just seems like we're really a long way away, and investors are still haven't quite jumped in.
Not at all. I mean, we're handling as much as we can. It's been a hectic pace here at Guildhall with people trying to, get their RIF withdrawals underway. We help people to take physical delivery out in kind, in your hands, out of your registered plans. And the transfer period from institution to us, that's taking long. The pushback that people are getting. So you really have to push back and fight for your money these days. Just to remind you, this is your money, your wealth, your inheritance that you fought for, that you work for, and you don't need to work 2 or 3 jobs to maintain a good standard of living. We believe very strongly that this is the future, that this is going to be life-changing for yourself, your family members, and we would love for you to, pick up the phone and give us a call. That famous number, as you know, is 1-877-8-SILVER, and the website is guildhallwealth.com. Or, give us a call directly. We're always standing by, ready to take your call, or just come and pop into the office.
Although it has been very busy, so please be patient
Leave
with
a message.
us. Leave a message. We will get back to you. We are working overtime. But ultimately with Guildhall, we have a motto: if you can't hold it, you don't own it.
Bottom
and
line.
Within the registered accounts, which we love, it allows you to hold actual physical gold and silver. It's stored in a Brinks depository, fully allocated, fully segregated. You maintain complete ownership, and it's held in a vault outside the banking system. And on that, there's been some crazy, fake news on that saying, oh, somehow Brinks is stealing from people's accounts. Listen, Brinks don't care. They are union workers. They do their job. They put the product into the safety deposit box, or they put it into the sub account. They put it up on the thing, and that's it. They have massive amounts of insurance on their business.
Yes.
Okay. And every person who works there has to make sure that they're on the right, all the policies are in place so that they're not on the wrong side of that insurance. So it's just unbelievable, the type of information that's coming out trying to stop people from getting into the market. But it does feel sort of like the type of desperation that we're seeing at Davos, and how the globalists are it just all smacks of desperation. So the message is don't fall for it. Talk to experts. Do your own research.
Yes.
And you'll see the facts. We've presented them today. So if you want to hold some physical gold and silver, you can buy it direct with Guildhall. You can store it in a depository. We start at about 500 ounces of silver. And what's great about that is it means your product is secure. It's insured. It's there for ease of liquidity. You can always take delivery of it if you'd like. It's always yours. That was nice. And then within the registered accounts, again, if it's a TFSA, you decide you want to take delivery, no problem. There's very little red tape with that. In a RSP, RSP, or a RIF, a LIF, you can take delivery. You just have to be willing to pay the withholding taxes, yep, or the income tax on the new funds that you've made. Right? We should definitely get into the whole income tax, withholding tax issue in the next show, because it's something not to be feared.
But I do want to highlight, for the last 20 years plus, Guildhall has been providing the means for Canadians and people from around the world to get into physical precious metals. And, from the very beginning, since 2002, my hat's off to Jeremy, because him and his father were the architects. We were the first and the pioneers to be able to hear from the people. First of all, I have these RSPs. I want to use them, want to protect them. They were the ones that were the architect, this whole solution of bridging the gap. How do we get physical precious metals within RSPs? Guildhall became the pioneers of this in 2015, and it was Jeremy's vision with Paul. So my hat's off to you guys for bringing this to the Canadian landscape, and it's been an honor to help Canadians realize what they have to do, roll out of the RSPs. It's a lateral transfer.
Yeah.
There is no taxation at that time, but we'll get into the tax part in the next
Yeah, it's
episode.
definitely not to be feared, and the type of money that's being made, you can
Right.
definitely overcome it. If you like what you hear, get in touch with us. We'll show you how to get involved in the market. We want to thank everyone for joining us this week, and Jerry, thank you for answering some great questions and bringing good discussion to the show. That's it for another edition of the Real Money Show. We can't wait to speak to you next week. Feel free to reach out to us at guildhallwealth.com, and please be patient. We are doing our best, but we will return your call and answer all of your questions and help you get into the physical gold and silver market.